Good day traders, Richard here doing a quick Ichimoku cloud chart market review of Tesla. Now we're starting off with a 4-hour chart, just looking back at some of the prominent Ichimoku cloud chart sell signals. We had one right up there and we had a huge more than 30% drop since then. There were various other sell signals as we went along in this correction, as it sliced through the cloud there as well. Top in the cloud resistance there, sliced through the cloud chart support there, sliced through the cloud chart support there as well. And then the top end of the cloud there once again also provided some shorting opportunity because the resistance held. Then the taps open, the stock rolled over, and it tried to rebound from this 339 old cloud chart support zone. You can see the top end of the cloud here, as well as the turning line and the standard line, and these lows here used to be support levels. It collapsed through that, and then it's fighting for support between 313 and 300. So it looks like we just did get a bit of a rebound there. I think the after hours price is a little bit higher at the moment, but you can see how this 313, 300 and 285 zone is a significant support zone from an Ichimoku cloud chart perspective. You can also see the standard line there. The old standard line of November 2024 also became a significant support zone. Now the question is, are we going to get a relief rally back up to the first level of resistance, which is the turning line and then the standard line of the cloud? And then if those resistance levels are broken, then upside target is the bottom end of the cloud resistance zone and then the top end. So these are the upside target if support holds, and if we get a significant rebound from this 300 to 285 zone. So this can be a potential area for a relief rally or retracement trade back up to the standard line and the turning line, as well as the bottom end and the top end of the cloud. So these are the upside resistance targets if we get a significant support rebound from these cloud chart support levels. Now let's just take a step back to see where these levels come from. Now on the 4-hour we can see this is the zone, the support zone. If we go back to the daily, you can see this daily support zone as well is between that top in the cloud and the bottom in the cloud there, between 285 roughly and 313. So we had a cluster of support, so it is a potential area for a short-term relief rally in Tesla. And if we go back to zoom in here, then the upside first resistance will be the standard turning line of the cloud there, and then the standard line of the cloud is going to come through at that point in time. So the bottom end of the cloud, this zone, is the upside resistance target if we get a significant rebound rally from this cluster of cloud chart support. So there's a significant line in the sand here at the bottom end of the cloud there, 287, and then the other one is right here at the top there, 292 on the daily, and then the other one is this zone there. So you can see that 311, 300, 292, 287. This is a significant support zone. So it will be interesting to see if Tesla can rebound from that support zone. Then the upside resistance targets, if we get a successful rebound from this zone, will be the turning line first, and then by that time the 364 is the standard line. And if we get past that resistance zone, then we're looking at these 292 and then the top end of the cloud there as the upside resistance targets. But it can take quite some time to get back to these levels. Now if we go a little bit step further back, what is the weekly chart looking like? You can see the front end of the weekly cloud here, 313 is a major support zone. So it looks like we could possibly get a rebound rally between this cluster of 4-hour and daily support zones, as well as the front end of the weekly cloud. Now interestingly enough, if you look at the cloud cross bar in the weekly, it had a really strong rally and Tesla became very extended from the top end of the cloud, and then we got our correction. I refreshed the chart, just getting a bit of a cleaner chart up. Let's take a look at those levels. So the front end, the bottom end of the front end of the cloud, that is a significant support zone. So we could see some support come back in at these levels. On the weekly chart, the next level to watch out for is this top end of the cloud here. That's also a potential support zone, 275. So you can see there's still some downside risk in Tesla based on the weekly Ichimoku if this front end support zone fails. Now let's take a look at the monthly, a really big picture move, and you can see where this potential support zone is. We look at the bottom end of the front end of the monthly cloud. 296 is a significant one, as well as the top end of the cloud. You can also see how this is the standard line of the cloud, also a significant support zone for Tesla. So it'll be interesting to see if we get a bit of a technical rebound from that zone back up to the turning line of the cloud as a kind of relief rally of this kind of correction. So kind of looking like a Fibonacci retracement. But the monthly chart is consolidating after becoming too extended from the top end of the cloud. Weekly price action is still above the cloud. That's bullish long term, but we do have significant downside risk to the top end of the cloud. Yeah, 275 is the downside risk on Tesla on the weekly chart. And now on the daily, we can see the bottom end of the cloud. Yeah, that is the area to watch out for. There we go, 287. So this is a cluster of downside risk in the current trend. Now, price action below the cloud is bearish. For Tesla to be bullish, we need to be back above the top in the cloud. So there's only short-term swing trade opportunities from potential rebounds from cloud chart support levels back up to the bottom end of the cloud. And if support fails at this level, then we've got downside risk back down to this support zone here. Bottom end of this cloud chart support zone of 237. So that's the downside risk. So there's some significant downside risk in Tesla. You can also see we maybe have a third wave down, one wave down, pull back, one wave down, pull back, and another third wave, a long wave down. So you can kind of see that this there is quite a high probability that we could still see 237 to the downside on the daily chart. But back to the 4-hour one. Let's just look at that. So it will be critical to see if we get that support to come in to Tesla today between this 314, 296 and 275 and 287 zone. And then the upside target, first one would be the 330 zone, which is the turning line of the cloud. And then next the standard line of the cloud. And then it's the bottom end of the cloud. Now do remember, we are trading counter trend, yeah, because price action below the cloud is ultimately bearish. For Tesla to be bullish on the 4-hour, we need to be back above the top end of the cloud, yeah. So there's still some significant downside risk in Tesla with short-term swing trade opportunities based on the Ichimoku cloud analysis. If we take our analysis one step further and we look at point and figure charts of Tesla, and we first start with the 1% by 3, which is a logarithmic point and figure chart, we can see if we look back historically, we had a couple of really strong rallies. And we met a couple of upside targets. I'll try and get the most recent one. There we go. There we go. We had a strong rally and we met this 395, 415 and 445 upside point and figure chart targets. There's still the 711 and 618 targets, but we haven't got a follow through on this move. We need to continue the rally beyond these points there. We then got our point and figure chart reversal, and then that started activating some downside targets on the log scale ones. First one was that we got 333. We hit that target. So it's interesting as a double cluster downside point and figure chart target. There's still a downside risk to 260 based on the point and figure chart. If we don't get a reversal to the upside in the coming week, we could still see the 260 downside target. And then there's another 222 downside target of 26% drop in Tesla if we don't get a point and figure chart reversal to the upside. Now that's for the logarithmic scale one. If we look at the normal one, point and figure, looking at the close, it's a 3 by 3 point and figure chart. And we can see in the rally that we've had, the run up, we've met the 357 target, we met the 369 target, we met the 429 target, we met the 441 target, but did not meet the 558 target. It made a huge reversal to the downside. That then activated when we passed this downside target point there. That activated this target of 315, and we ultimately hit that. And this price movement to the downside there hit the 366 target there, and this downside target that we got from that short move, we soon after hitting that in February, we hit that target to the downside. So you can see we did take out a whole cluster of downside targets. Now the next ones are quite far down here at 219 and 186. but beware any kind of technical reversal, Fibonacci reversal of this move. We could see a bit of a reversal to the upside, a consolidation or a relief rally. Because watch out how, look at the kind of symmetry in these targets. You got this big move down, pull back, and then another big move down, pull back, and another big move down. So we're almost looking like we're doing that third wave down type thing. But watch out, we might get a point of figure chart reversal this week to the upside for just kind of a technical retracement of this move on a point and figure chart basis. Now, if we do get a point of figure chart reversal, now that we hit these downside targets, there's an upside target of 420, but that will only be activated if we get past this last price there. So we need to see a relief rally back up here, a breakout past that resistance zone, and that would activate the 420 target. So 420 upside targets if we get a reversal here, downside risk towards 219 and 186. If we don't get our reversal there. So there's quite a wide range and quite a risky range. Now, if we just take a look at the fundamentals, a little bit on the fundamental side of Tesla, if we look at the star mine models, now it's in the bottom 10% of the market in terms of valuation momentum. So from a valuation and momentum perspective, it doesn't really offer much value. The analyst revisions is to the downside a lot. Intrinsic valuation is the bottom 1% of the market, so it doesn't really offer much intrinsic value at this point in time. Relative valuation is also frightfully expensive compared to the rest of the stock market there. And also we've got an earnings quality problem here as well. It's in the bottom 30% of the market, so very poor earnings quality in terms of looking deeper into the balance sheet and the income statement as what drives the earnings growth there. So you can see they're quite a high risk stock to be trading. On the upside is insider selling seems to have stabilized, so that's in the top 30% of the market there so far. And price momentum in terms of what we can expect over the short term is in the top 10% of the market. So we can expect that swing trade theme of buying the rebound rally from support fits in nicely with the price momentum argument. But do remember, on a fundamental basis, the earnings quality is in the bottom 30% of the market, so it's very, very poor earnings quality. You've got some structural credit risk as well. Text mining risk is there as well, and then credit risk combined is 67 percentile ranking, which is not exactly very good. The analyst revision scores is 13 percentile rank of 13. It's in the bottom 20% of the market basically, so you can see the market outlook is quite negative. If we look at relative valuation as well, it's in the bottom 10% of the market on all of these factors, so it's a frightfully expensive stock. The 12 months forward price earnings ratio is 103 versus the industry's 9.8. EV to EBITDA ratio is 49 versus 4.6. EV to sales 8.3 times versus 0.56. So it is an incredibly expensive stock. Price to cash flow ratio, or terribly unattractive on that basis. So we are just trading this on a swing trade, rebound rally from critical support. We're not making a valuation call whether this is a fundamentally good quality company. There are fundamentally better quality companies out there based on earnings model as well as intrinsic valuation model. Now, the other important thing to remember is that the current stock price, the stock is still expensive, the current stock price is implying that the company will have to grow 30% per annum indefinitely, so at least the next 10 years. So if they can't do 30% growth per annum, the stock was going to drop further. So you can see there's significant downside risk, because the market implied growth rate, if we do a DCF valuation by looking at the input as the price, we can output the growth rate, and it's in excess of 30%. So there's a big challenge for the Tesla management to deliver on that market expectation. But so far, not very attractive on a valuation and momentum basis. Price momentum alone for the technical rebound trades, and also remember the stock is very expensive. There's a lot in the price. It's also got a reputational issue due to recent events in the news, so there are some significant downside risk in the stock based purely on valuation momentum, analyst revision scores, and intrinsic valuation, and also that market implied price of 30% growth. But so far, just back to the initial chart that we're looking at. Yeah, And so we're looking for a potential rebound if support comes in here at this level, and if support fails, then the downside risk target would be 287 and then 237 to the downside, 275 as well. So keep an eye on that. Until next time, happy cloud chart trading. Bye for now.